I'm Jim Vass from ATB Partners, and today I'm here to talk about what you need to be doing if you're going to undertake the task of lodging your own income tax return. One of the first things that we need to do is to identify what's income. Now, there's a whole myriad of items within the tax return once you start looking at it and going through it yourself. There's salary and wages income, which is identified off your P.A.Y.G summaries. There's lump sum payments, there's interest, there's dividends, a whole heap of things. So one of the things that you've got to be aware of is in this electronic age that we live in, the tax office actually receives this information from all these different sources. The tax office actually, believe it or not, knows how much interest you've earned, and it'll actually pick up interest that you've missed. The tax office also knows what dividends you've received, and it can more than likely pick up what you've missed as well. So you've got to make sure 100% that you're very, very accurate with all the income that you've got. Also, a lot of people will forget the government pensions that they may have received if they're on Centrelink for a short period of time, maybe even if it was only for a couple of weeks. The government will report to the government. The Centrelink will report to the ATO that you're actually receiving a pension, and if this is not included, or interest is omitted, or dividends are missed, the tax office will eventually pick it up. It may not be immediately, but probably within a year or 2 years, it'll pick it up. It'll come back, it'll say, excuse me, we've picked up this income that should have been included in your return. You haven't included it in your return, so please pay us the additional tax, and here's some interest. And they may actually even hit you with basically a duty of care, or how they try to determine how much care you've actually taken in the preparation of your return. And if there's a lot of things that have been omitted or been done carelessly, they'll probably also hit you with a being careless fine as well. So that could go from 25% to 100% of the tax that's been avoided. So these are the things that you've got to actually be mindful of. There's also things like share schemes, business income. Now, quite honestly, share schemes are very, very complex. They come about by you as an employee being offered a discount to purchase shares. The information that I've provided you today is very, very brief. It's general information. It's not information that I'd be saying, look, use this video to go and prepare your tax return. The important thing is, though, you do understand that there's things that you've got to be looking at, things to consider, and it's not simply a matter of let's just fill it out and get it off our plate. I'd always recommend that you do speak to a tax professional to prepare your tax return, unless it's so straightforward that there's nothing to it and you're not going to claim anything. Keep it simple. Don't try to get too smart with the tax office, because they will catch up with you. And by all means, if you feel that some of the things that we've talked about today are complex and you do need some help, feel free to look us up. Thank you.